Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 19, 2022. There's a request to cover AMC Entertainment, ticker symbol AMC. We'll look at AMC here. It's only for speculators, not for long-term investors. So folks who want to really have a short squeeze experience and do some short-term swing trading. So with that, there are a few super hit movies off late that's helping AMC from a top line perspective. So with that, let's go into a little more details and see if AMC is worth buying here. We'll look at company overview and look at the competitive landscape and review a few charts and look at the deep dive here, look at the financial performance, and finally compare a few stocks in the entertainment industry and do a final verdict. So with that, let's go into a little more details here. As you see here, AMC is really helping to deliver a very good experience, and a lot of people are at home, stuck at home here because of pandemic, and they love to go out and watch movie in a theater with the family. That's where AMC comes in. It's a recovery play, and as COVID gets a little more under control, folks want to go out and have some experience. That's where AMC comes in. It's a good recovery play. So as you see here, we got AMC. They're expanding. They're in 950 theaters right now, and they are into 10,500 screens. As you see here, AMC is really expanding, and they want to continue its strategic expansion here into multiple locations. It's good for AMC to gain market share, but at the same time, that's hurting the stock from a bottom line perspective because it's putting more and more money into expansion. And at the current time, because of the Omicron, folks are not really willing to go into theater that much. That's why it's not a great idea in the short term, but in the long term, as Omicron and COVID gets under control, this could be a good move. That's why I say that it's a short-term pain here, but long-term, this could be a good one for AMC. It will give them some competitive advantage and set them up for a future where COVID is under control. So with that, as you look through here, let's look at a little more detail. As you see here, AMC, they are going to give you theatrical experience, and company operates theaters, as you can see here. And from a stock chart perspective, look, there's a huge big short squeeze as you see here, and see what happened afterwards. It's coming down as you see here. So at this time, you got to jump in and see if it's worth buying here. And stock price as you see here around $18, and it's down even yesterday as you see here. From a consensus estimate perspective, right now AMC's moderate sell here. We got four analysts who are covering here, and they're saying moderately sell at this time. And as you see here, stock price is around $18, and market cap is around $9.67 billion. So, and as you look through here from a news item perspective, look, all the meme stocks like GameStop, AMC, they slide 10% in the market sell-off. So what's going on here is really when the market is selling off here with the high inflation, stocks like AMC and GameStop, they get hit big time here because folks are really going after better stocks here. That's why AMC gets hit, when the market is really having tough time and the high inflation. So that's what's going on here. So from a news item perspective, all you see is, AMC is red and AMC sinks larger. And there are some good news as you can see here. Spider-Man No Way Home, that keeps smashing here. That's a good one here. And Scream also has some hopes here. So there is some good news here. But generally understand that the stock market tanks because of inflation worries. These type of stocks will get hit harder. That's why you could see if it's worth buying when it's get hit so hard. So with that, let's go into a little more detail. As you look through the estimates here from an analyst estimate perspective, look, we got current stock price around $18. All the estimates are below the current stock price. That tells you at this time downside risk is there, but probably it's if you're willing to hold it for a little bit longer time, say midterm to a little bit longer term, that may be a case we can make a case to buy slowly on the down days, hoping for a nice bounce back. As many of you know, there are various stockholders who are holding the stock despite of its pullback here. That could be a good one that can give you some bounce here. And from a technical perspective, look, right now it's a strong sell. This is according to trade view here. So that's what's going on here. Inflation worries all these high growth names without too much earnings. They're getting hit here. That's why it could be okay to slowly start buying if you're a speculator, not for long-term investor. All right, let's look at the competitive landscape here. As you see here, we got the competitive landscape, and the way I sorted this is really, if you see here, we got 1 year performance. The stock at the top has done well in 1 year, so that's where AMC comes in. As you see here, AMC has done good in 1 year. It's a $18 stock, as you can see here. In 1 year, good performance, 709% in 1 year. That's a huge performance. But keep watching here. They do have some good gross margin, but net margin is negative. So right now they're losing money. They're not making any money here. Stock is completely sold off with a low RSI, as you can see here. High short ratio, 18% right now. And they do have some float here, which is a little bit higher, not too high. And from a price to sales perspective, it's not very expensive. But the red flag is the net margin here. They are losing money, and that's what Wall Street does not like at this time here. And we got one more operator here, Live Nation. I like this stock also. It's again a steady Eddie type name here. Look, they put up some nice performance here. 1 year 61% and 5 year 317%. As you see here, this stock has a longer term performance also. That's a good one here. This is a better operator. This is also losing money, as you can see here, 24% net margin negative. And they also have a high short ratio, 10%. And this one is a little more expensive. Look, price to sales ratio is 7, a little more expensive. But as you can see here, this stock is going higher. I think stock is already clobbered big time, so it's going higher slowly. This could be a good one for a little bit longer term holders here. And look, it's got a little bit better financial here, which is C grade here, whereas whereas AMC has got a not so great financials here. It's a F grade from a financial perspective from Morningstar, and profitability is also F. So as you look through a few more here, we got a few more competitors here. Cinedigm, which is a very small operator, as many of you know. Look, this one does not have a good good profitability as well as growth here, and very low market cap, just $183 million. And look, it's got a very, very, very low stock price, just $1. It's really bottom of the food chain here. And they are also losing money, as you can see here, big time. And as you scan through here, they have a little bit lower price to sales ratio. Valuation is not a big deal, but it's been losing money, as you can see here, for investors in last 6 months or so. And they've lost money in 5 years. So that's why this is again for a speculators here. You could speculate on this one also, but not for long-term investors. And we got some solid players as you go forward here. Keep watching the financials here. We got Warner Brother. So this could be a good one from a long-term perspective. Look, it's got a respectable financial B grade from Morningstar and a C grade for growth here. It could be a good one. Right now it's sold off, as you can see here. And RSI is also low. This could be a good one for long-term investors. It's got a good fundamentals. And then you got a few more better ones here. Look, Comcast and Netflix. You know, all these work here. They got a solid financials here, and many of them have got solid growth here. Right now, entertainment is hit hard, as you can see here, and many of them have got low RSI. Look, we got Netflix sold off completely, very low RSI. Chart are also sold off. You could look at those. Comcast is little high. You can wait for a little pullback here. And we got here Disney, one of my favorite stock here. It also got sold off here. I would be a buyer of Disney at these levels here. Look, Disney is a great play here. They went up yesterday even though market came down. So this could be a good recovery play here. And then we got a few more, as you can see here. I know many of you love ROKU. Look, Roku is struggling right now, as you see here. It's down big time, but it's got a nice financials and nice growth here. And stock is, as you see here, down big time in the near term. And this also has a little bit higher price to sales ratio here, 9. That's why it's struggling a little bit as we speak here. And as you see here, we got few more players here. We'll look at few of them in little more detail and go from there. All right, so let's look at the charts here. As we look through the chart here, we got AMC. Look, we had a nice, huge short squeeze rally here. After that, stock is selling off, as you see here. Since last July, stock is selling off here. On the contrary, keep watching what's going on. Folks are really buying the stock despite of stock falling off here. That tells you folks are not giving up here. All the Mimi gang here, the short squeeze folks, they are really compelled to hold the stock here. They're holding it despite of this drop here. That can help this stock as it comes down too much here. That's what is giving it, all these swings that you see here. It's because of these loyal stockholders here. They're not giving up. That's causing these swings. I think overall, because there is a good on the balance volume that tells you more buyers than sellers, that's helping the stock to keep its ground here. That could be a good one for this stock here. And then we got here Live Nation. It's a solid operators. As you can see, this is going up nicely. There are some downturns, as you see here, pullback, but overall it's going higher, mostly higher highs and higher lows. And also, as you see here, after dropping off on the balance volume, is trying to stabilize here. So this is a good one to buy, for the longer term. Stock is, it's RSI is 51, middle of the road here. And then you got Liberty here. As you see here, Liberty is also trading sideways off late. On the balance volume is going higher. RSI is 49. That tells you could buy this stock here. Even though stock is having some trouble here, on the balance volume is going higher. That's also a good one here. And Warner Media, as you see here, its stock is falling off here. On the balance volume fell off here. Now it's trying to stabilize. This also is a good one for the longer term here. All right, then you got a few more operators here. As you see, we got few more. Look, we got Dish here. Dish, big time drop off, and now it's trying to go higher. And right now RSI is 62. I say wait a little bit, let it cool off, then we can buy Dish. There is no rush here. And then we got Comcast here, sold off big time, as you can see here. Now on the balance volume is going higher, and RSI is 47. That tells you could even buy some Comcast at this level with the lower RSI. This is a solid operator. This could do well. As the stock gets hit here, I say you buy some Comcast for longer term. And then you got Netflix here. Look what's going on here. Netflix dropped off big time here. On the balance volume is pretty constant. This is a good one for long-term holding. You could buy some Netflix into this downturn here. I've seen Netflix many times. Folks always wrote off Netflix in these type of situations. They always come back. And also the news about Microsoft buying Activision Blizzard, or an agreement to buy Activision Blizzard, that's also causing some trouble to Netflix because they're also expanding into gaming, as many of you know here. And then you got Disney. Disney, as you see here, stock is stalling off late. Came down big time here. Now it's stabilizing. This is a great reopening play here. I would be slowly buying some Disney and accumulate this one here. And let's look at a few more. We got Cinemark. As you see here, it's a low price stock, just $16. Stock is trying to make a small comeback after the big drop here. On the balance volume is going higher. This one could be a good one here. There are more buyers than sellers here. It's a low price stock, completely sold off with a low RSI here. And then you got Viacom. There is nothing much going on here. Stock is trading sideways. I would say you pass on the Viacom here and look at other plays. ROKU has been sliding off late, as you see here, big time. On the balance volume is also falling here. I say wait a little bit, let it cool off more. Then we can go into ROKU. And then you got Discovery here. This is also trading sideways. I say pass on Discovery for now. Look at other candidates. So with that, let's jump in here and look at AMC and do a quick deep dive. So as you look through here from AMC, Look, earnings per share trending negative, company not making money. They're expanding and going into multiple locations. That's hurting the earnings. So that's why company not making money. Not a good trend here. And from a sales perspective, annual sales, it did very well in the beginning, as you see here, but now it's down, as you see here in the 2020. So that's why we got to be careful. Top line is not growing and bottom line is shrinking. That's not a good place to be in from a fundamental perspective. And they're keeping the share count under control here. Look, share count slightly increased, but not too much. It's not too bad. I think they're doing okay to control the dilution here. And from a quarterly revenue perspective, there's some uptick, as you see here. The new labels, new movies are helping the company. If they can keep this trend here, that could be a good one here. Operating expense is increasing slightly here. They're expanding. That's what is going on here. So I think they have to control the expense and increase the revenue. That could be a good one here. Right now, at the present time, they're doing okay because revenue is growing at a faster clip than the expense. I think at current time, they're okay, but they got to control and keep it that way. And from a quarterly net income perspective, trend is good. As you see here, they're losing money, but they're losing less money. That's always good. Now let's go into some more details. It's an eye chart. Let's look at a few details here. As you see here, we got AMC from a market cap perspective. Look, market cap has grown significantly from 2019 here, $962 million to $9 billion right now. They got nice market cap increase here, mainly because a lot of folks are following the stock and buying the stock for speculation. But as you look through here, quarterly stock performance, if you're holding the stock for last 6 months or so, you're losing money. Look, 50% negative performance in last 3 months or so. And we got again 33% negative performance. So this stock goes down and up. So that's why you got to buy this when they're down. Look here, we got 2 quarters of downturn here, then finally shot up. And now we are in the similar situation here. Look, January right now it's 50% down and 33% down. So compare this to what happened before here. So that's why I see from these levels here, if the history is any lesson here, we could see a bounce here. That's why if you're a little bit longer term holder here, you could buy some at these levels. As market recovers, you could see a nice bounce like it happened back in 2020. And then we got from a sales perspective, it's increasing, as you see here, from 445 to 763. That's good here. And quarter over quarter sales growth is also good in last 2 quarters. They surprised positively to Wall Street. Wall Street loves positive surprise. And they do have good amount of cash, as you see here. Look, nice $1.6 billion of cash here. And cash is a little bit decreasing, but it's okay. They have a lot of cash. And they do have debt here. Debt is reducing slightly. That's also good news here. And we don't need to look at the margins here. There is no margin. It's a negative it's a positive gross margin. Gross margin is okay here, but net margin and operating margin, those margins are negative right now. But looks like at least net margin is trending in the right direction. They're trying to control from negative 77% to negative 29%. That's a good one here. Stock is doing well from a return on equity perspective of late because a lot of people like this stock for a speculation purpose. From a price to sales perspective, little pricey here, 9.7 or so as of 9:30. But on the down days, if you're a speculator, you could buy some AMC and go from there. All right, let's look at the daily performance of AMC here and see what's going on. So the way to read this chart is, I got here 1 day here on a daily basis, what's going on with the stock. Keep watching here. We got daily, the dates here on a daily basis, and keep watching. We got 1 day performance here. What happened on that particular day? Is it up? Is it down? And then we also have the volume here with the volume on a daily basis. And most importantly, we got here short ratio. Keep watching here. We got short float. That tells you on daily basis what are the shorts doing. And we also have a short float here that tells you the float increasing, or do we have more shares available in the market. So these are the good indications to look as you are looking at a short squeeze type play here. So look what's going on off late. As you see here, we got yesterday here 118, January 18, and stock tanked big time. Look, stock dropped off here, down 8.41% in just one day. As that was happening, we got a nice volume here, 55 million shares sold. And as you see here, we got still short ratio, which is steady here, 18.46, and short float is also steady. Looks like short float increased back in 1.7, as you see 1.7 here. Looks like on 1.7 we have a little more short float here. From this day onward, from 1.7 to 1.10, look, short float increased. That tells you there are more shares available for AMC here. So float is increasing. That's not a good sign. That tells you there is more supply. That's why stock is taking some hit in addition to the bad market situation right now. So as this is happening, I would say, because volume is good here, folks are really buying and holding the stock here. You could slowly jump in if you're a speculator and hold it for a little bit longer term. So as you look through the short ratio here, look, short ratio has increased significantly in the past. Look, we got somewhere here, we got very high short ratio, 21% or so. Now it's dropping off. That tells you shorts are covering slowly. As they cover a little more faster, that's when stock can go higher. Right now we have a short covering slowly, but shorts are still not covering too much. That's why, look, short ratio is staying constant. As the stock goes a little bit lower here, all these shorts, they will start covering because they can make some good money here, and that can cause a short squeeze rally. That's why at this time, if you're a speculator, you could slowly start buying this. As you buy more shares of AMC here, these shorts will get scared here. They'll start covering, and that will make the stock go higher. So that's a quick hypothesis here. That's why if you're a speculator, a case can be made. You could slowly start buying here and cause anxiety in these short sellers here, and they'll start covering. All right, now let's look at the chart here from a stock chart perspective. As you see here, huge big squeeze. It's a 5-year chart, as you can see here, 5-year weekly, and now we had few squeezes here along the way here. No big drop with all the economy tanking, inflation racing. That's what's going on here. Right now they are at say here 200-week moving average. They're trying to bounce off of this. So we'll see this might hold. So that's why a case can be made to buy slowly, even though expect some short-term pain here, but you could expect a short squeeze. All right, now let's look at a smaller chart here, a 1-year chart, 1-year, 1-day. Look, stock is trading sideways, as you see here. It's down off late, and look, on the positive side, look at the on the balance volume here. On the balance volume is pretty constant here. That tells you all the loyal AMC stockholders, they're not deterred. They're holding on and buying more shares as the AMC stock falls. That's why on the balance volume is keeping it pretty constant here. So folks are not disturbed here. All the loyal AMC stockholders are buying here. And right now momentum is low, as you can see here, and check-in money flow is showing some strength here. Some smart money is flowing into the stock. That's why if you're purely a speculator, a case can be made to buy slowly and hold it for a while. All right, now let's look at the option chain here. From an option chain perspective, look, stock price is around $18 right now, and all-time high is 72 in 52 weeks here. And at $18, we got a nice 52 open interest. Folks are buying options here. And look, at $30, we got a nice huge open interest here, 1,000 contracts. And there's also open interest beyond at 34, 35. And there is also put open interest. Folks are also hedging, as you see here on the put side of the house. Look at the open interest here. There is some open interest, but compared to the call open interest here, put open interest is a little bit smaller. That's why in the options market, folks are betting AMC will go higher. And as you look through option statistics here, it will also give you a little more better indication. Look, there is a total 542 call contracts traded, but 482 put contract traded. That tells you put call ratio right now is 0.88. That's below 1. That is still bullish. It's slightly higher. I've seen many stocks with a much lower put call ratio. This has got some puts trading also, but PC ratio below 1 is generally viewed as a positive sentiment here. That tells you more options are betting, more folks are betting stock will go higher. So VWAP right now is 18.74. Current stock price is 18.84. That tells you stock can come down maybe say 10-15 cents from here. That's a possibility here. But long term, it could be okay to slowly buy if you're a speculator. All right, let's look at a few more details here and rank a few stocks like AMC, and we got stocks like Live Nation, Liberty, Warner Media, and so on and so forth, and see what's worth buying here and go from there. All right, this is a quick chart here as you scan through. Look, we got AMC right here. The first column is all about AMC. And look, we got AMC. They've done well from a revenue perspective. They got top line, nice revenue. There is nice revenue growth as you see here. And they got nice gross margin. Net margin is not there right now. They're not making money. It's a negative. And look, from a price to sales ratio perspective, it's okay, not too bad here, not super valued here from a price to sales ratio perspective. And they're not making money. Earnings per share is negative. They've done great in 1 year, but in 5 years, they have not done well. And Altman Z-score is 0 point minus negative here. That tells you be a little bit careful. They don't have too much nice, good financial positioning here. I like Altman Z-score above 1.8 or above 2 is great here. But right now, financially, they're not too super stable here. That's why it's 0.6, negative 0.6 here. And that also from Morningstar perspective, look, they got an F grade for financials here. So, I mean, fundamentally, it's not great stock here. It's only for speculators, for a short squeeze type play here. Overall rating, as you see here, it's one of the lowest here. Look, it's just 14. That tells you this is not for the fundamental investors. It's only for speculators. You can take advantage of this speculation game and buy some, but no way for long-term investors. On the contrary, we got Live Nation here, which is a little more solid operator, as many of you know here. And this one, as you can see here, good revenue, $3 billion, nice revenue growth. And even in 5 years, as you see here, they've done nicely here, 316% here performance. And they got, even they don't have too much money here. But look, Piotrowski F score is 7. That tells you it's improving. Financials are improving. It's the same story. Even AMC financials are improving. The ratio is more than 5, which means it's okay. They're getting better. And this one gets a little bit higher overall score here, which is 48, which is good. And as you look through here, we will not look at all of them. Look, solid operator, Liberty, great score, 92. That's a good player here. Dish has a nice score, 93. It's also a solid operator here. And Comcast is a steady Eddie. I like this one too. Higher score. Netflix is a super operator. You could buy this into this weakness here. It's a good one to buy here. And then we got Disney. Disney is also super good operator. You could buy that one too. And Cinemark is struggling a little bit. That's why a lower score here. And you could buy ROKU slowly, even though there is some trouble in the short term. If you're a long-term buyer, you could buy some ROKU into the weakness here. And also VIAC also works here. So with that, now you might wonder what to do with my AMC stock here. As you see, we got AMC, all these meme stocks like AMC, GameStop, they got sold off here. So as the market tanks, these names get hit. Because in the speculation, these speculative stocks, they will take hit in the tough time here. That's what is going on. As the market gets hit in the short term, you could have some trouble for AMC and GameStop and some meme stocks here. But if you're a long-term or a mid-term holder, you could average down very slowly. That can be very good, especially AMC. It can go higher because folks want to go out and go into movie theaters. and they're continue to expand. As you can see here, they want to really expand, and once the pandemic is over, they want to emerge as a leader. That's why they're expanding, through multiple locations here. That's hurting the stock in the short term here. It could be a good long term play. And as you see here, there is some squeeze trending on the Twitter here. So even though stock is dropping, all these loyal holders, they are buying the stock here. That will give some strength to this stock here, and that tells you there are a lot of loyal holders of this stock here. All right, then look here, AMC dipped below 20 level here, and this has not happened since May 2020. Looks like trend is a little bit negative in the short term here, and they got some good movies here like Spider-Man. I think that's doing very well. That can help the company. They make money not only in the movies but also from the food and beverage. That's a good one here that can help the bottom line. So in the nutshell here, I say only for speculators, not for long-term investors. You could slowly buy moderately on this pullback here and take advantage, mainly because there are a lot of loyal holders here. They will hold the line for you, and you could expect a short squeeze from these levels. And from the history, we have seen the short squeeze playing out. The moment stock is down too long, there will be the short squeeze type situation here. That's why for a speculation purpose, I say moderately buy here. You can see a bounce in the midterm, and I think that's a good one for the folks who want to play short squeeze game here. So with that, thank you very much. Happy investing and trading. Please subscribe.